Okay, good morning everyone. Sorry for the apology due to not having the live webinar for this Saturday, mainly because some of you might know I'm currently in the midst of moving my house, and my new house it doesn't really have the Wi-Fi setup ready. So instead of a live webinar, I pre-recorded this and I'll be uploading this into YouTube and Facebook and Patreon lah. So this will cover the same usual stuff that we have been covering the past few webinar. So let's get going. Firstly, the fund flow analysis for SGX. You all should have read the Patreon post that I made on this Monday for it here. It's on the 16th November breaking. You all can go and find this post. The reason why this fund flow is very important because we have the institutional fund going into plus 500 and we have the retail fund going into negative 500. This is very significant because we have not seen this level of fund flow since all the way back in 2017 2018, meaning we are looking at institutional buying of SGX stocks that have not been seen for the past 3 years. They are positioning themselves for a higher price, and although in short terms, in daily, you might see a bit of stock falling here and there, you might see the price decline here and there, but in the long run, right, the smart money are prepping themselves for a much higher run lah. And what you can see right here is that a lot of the retailer they are cashing out. It seems that they are cashing out. They probably bottom pick a few somewhere, and then they think that STI went up like 200 points. They think that they have enough profit already, so they are cashing out. And it's really a huge mistake because as a trader, you need to project slightly long term. And if the trend is going high, right, you should not be cashing out too early lah. So this fund flow is very significant, and I believe in the next 2, 3, 4 months, there will be much higher price in terms of Singapore counters lah. But of course, this doesn't mean that you should go and place very buy a lot of shares or lots that is beyond the limit of your comfort zone, beyond your risk management. You should still adhere to all the risk management rules that you set out. Make sure you don't overcommit because when market goes up, it is not going to be in a one straight line. Price will drop here and there, and if you are overcommitted, you will most likely be scared and you will you will sort of get whipped out of the market lah. So still try to be careful of your exposure and your risk. And you can see here on the cumulative chart that the retail is sort of U-turning, and of course the retail is U-turning here, and the institutional is U-turning back up. So these are very good signs that in the future we are going to have good price coming lah. Okay, same thing for the STI fund flow. STI fund flow is just for the 30 counter inside the STI constituent. So you can see that price is coming. They are sort of reversing lah, where the rate used to be on the positive side and the blue used to be on the negative side. Now the situation have reversed. So I hope to see this trend continue, which will mean that going forward we are going to see higher and higher prices. Okay, so let's look at some of the chart. Okay, firstly, I'll go through some of the actions that I took last week, which you all should see on my portfolio update really, but quickly, let's just go through. Of course, the biggest one is, okay, so currently my portfolio, I don't really know what this how this 9.4 is calculated, mainly because I took my profits, and based on the the capital that I have, right, I'm currently up year to date of 29.56% lah. So my portfolio is up almost 30% this year. And looking at it, the biggest action that I took last week was my AEM, which I held 9,100 shares, was hit by my stop loss at 3.30. So I took a loss of about 2.6k lah. But the thing is that if you look at 9,000 shares at at 3.3, right? Actually, this amount of money is about 30K, very close to 30K, 31K like that. This 31K is locked inside my AEM, which I now finally take the loss. So I'm sort of cashing out with the loss lah. And by cashing out, right, it actually freed me up to make my Starburst and SPH trades the following day lah. Because if I held on to the loss, right, although I may not realize the paper loss, right, what it could mean is that it will mean I do not have any capital left to trade any other counter. So this can lead to a situation where because if you look at it, right, I actually gotten let me look at my close position. So if you look at Starburst, I gotten about 3.7K. On SPH, I gotten about 3K. So this in total add up to about 7K like that, going close to 7K lah. So if because of this 2.6K, I pity this 2.6K, I don't take the loss, right? What would mean is that I will have missed out on this 7K profit. So sometimes taking the loss is actually a good thing. So the thing is, you can actually hold on to this loss. Then probably 3-4 months later, AEM went back to went back to a price where I will no longer be taking a loss. So in a way, I am very, very happy that, oh, actually I took zero loss for AEM. So I'm very happy. But you miss out the opportunity cost by holding so long. So in this case, I actually took the loss, but I have gotten so much more back in return. Whereas if I hold on to it, right, and even if price recover, right, I'm going to miss out on a lot of profit lah. So for a lot of you are wondering how come I cut loss lah, this lah, that lah. I cut loss mainly because it is part of my trading plan. Let me show you AEM chart. Let me show you AEM chart here. Okay, so this is actually AEM chart. Okay, so previously this is the support level. Okay, so 3.3 support level. So I actually took my loss at this level lah. So when the support was broken, right, I no longer want to be in this counter already. I'm going to go. So price can start here for some. So my entry, my average entry price is around 3.5 like that lah, or maybe slightly lower. I got several entry into this. Let's say my average entry is around 3.42 lah. Let's just say. So let's say for example, if AEM price stuck there for a while, 1 month, 2 months, then eventually if it come back, okay, I break even. So I'm happy that I break even. But the thing is, within these 2 months, right, I could have gotten a lot of profit from any other trade with the capital being freed up lah. Okay. There is a reason why my stop loss is there, mainly because it is a support, and there's also why I adhere to my stop loss and I took the loss mainly because right now everything is moving so fast. AEM is actually one of the weaker counter in the past 2 weeks rally lah. So why would I want to hold on to a weak counter and forgo all the strong counter that are running up? This is what I mean by letting the weak, cutting the weak one loss while adding onto the winning counter, riding onto the strong counters. So a lot of people like to quote this kind of thing. It's very easy to just say, but in practice, right, how many of you actually take action on such quotes? Like a lot of people quote Warren Buffett or hold on to the loser, hold on to the winner, cut out the loser. Very easy to say, right? But when it comes to actually the time to make the action, right, not many people are that have that kind of conviction to make this kind of action. So for me, I have a very strict plan. I have a very strict stop loss. The moment I hit the stop loss, I do not think twice. I immediately exit. I don't wait for the market to close. I don't wait for the price to come back up. I don't wait for 1-2 weeks later. I simply just cut. So there can be situation where I cut, and then the next day price went back up. Does those situations happen often? Yes, it does happen often, but I don't care, because if I go and care about every single kind of this sort of situation, right, it will become a point where once again, I no longer have any plan. I'm just basing things on feeling and the market noise and market movement, and end up you do not have a trading plan at all. You are just doing things, you will just have random losses, random wins here and there. So what I want is a concrete plan that I can rely on. If it goes back up, let it go back up. But in the long run, all the trades that actually doesn't go back up, doesn't recover, right? It's actually more than those that eventually do recover. Meaning I could have avoided a lot more losses than than, let's say, if I don't follow my trade plan. So for example, let's say Aspen, right? Let's look at Aspen. For those who know, I also took a loss on Aspen. I think somewhere around here. I took my Aspen loss at here at this point. Okay, so this was my trade plan. When Aspen hit 20 cents, I immediately took a lot. But the thing is, after that, it recovered. So a lot of people are telling me, "Hey, you thought you could have hold on to it. Why? You could have waited one more day or things like that." But the thing is, most of you are looking it back on hindsight. So the in all my trading years, I have executed about 300, 400 over trades. Those cases where I hit the stop loss and price go back up, right, it's probably 5-10%. Most of the time, right, you will come into this kind of situation where my stop loss is here and price hit the stop loss and it continues to go down some more. It continues to go down some more. And if I have held it, like if I keep holding this kind of trade, right, I could have been stuck in there for 3-4 months, and those money could have been used for something else lah. So I always adhere to my stop loss. I don't the moment it hits, I don't think about anything really, because I have a track record of 300, 400 over trades that, okay, maybe some of them might go back up, but let it be. But most of the time, I am actually right to take the loss. So I do hope that we cannot you all understand that sometimes stop loss, you cannot look at it on a case by case basis, because if you look at it like this, right, you no longer have a plan. You are just doing things randomly, and then things by hindsight and predicting and stuff like that, because but in the long run, right, most of the time you are going to make a lot of losses simply because you do not adhere to the stop loss lah. Okay, so with that said, next I have Starburst and SPH, which were both intraday trade. So you will not see these two intraday trade on Patreon or anywhere else, mainly because you can read this here. Intraday day trade are very fast and furious trade. By the time normally I enter them around market hour, around when market open lah, like 9 a.m. like that. So when I am entering, right, after I enter, let's say if I make a post about it, if I say, hey, you all can buy this and that, by the time I make the post, it will probably be like 9:15. And by the time you all see this, because it is a working day also, if you all see my post, it'll probably be like lunch hour 12, or maybe you go to a toilet break, you happen to see my post, which probably be like 10 a.m. About 1 or 2 or 3 hours have already passed since the time I make the post. So what could happen is that maybe price have moved a lot already, and you will end up in the FOMO mindset, and you will try to chase. And if you try to chase intraday trade, right, most of the time you will end up in a big loss lah. Simply because you are trying to you're trying to chase a trade purely on emotion and not based on any kind of risk management or strategy lah. So actually, me not posting any intraday trade is for the good of the public, mainly because I don't want people to go in late and then lose money. Simply because actually I did told one of my good friend about Starburst, and he went in at like 3-4 p.m. Whereas at 3-4 p.m. I have already taken my profit, and now he is mad at me because how come I didn't tell him earlier? How come I didn't test him? So you can imagine that my Facebook group is about 5,000 people inside, or I think going 6-7,000 already. So I cannot guarantee people will read my post the moment I post it, the moment I enter the stock. So it is actually the good of everyone that I am not going to share my intraday trade lah. in public lah, the intraday trade setups. But do realize that in my trading course, we actually utilize intraday trade scanner, which right now I'm posting the scanner, but those are daily scanner lah. But we do have an intraday trade scanner which scan the stocks on a much lower time frame, which you can spot potential intraday trade counters lah. So most of my trainees are using it already, and I think some of them caught some. They probably didn't catch Starburst or SPH, but some of them caught things like China Sunshine lah, or a few other counters which I forgot already lah. Intel in International Cement, yeah, those kind of stuff lah. So this is not to advertise my course, but if you are interested in knowing how to intraday trade in Singapore market, right? I think my course will be the one way you can come to learn lah, because it actually require a lot of planning and strategy and techniques. It's not something that you can look at a Facebook post and then blindly follow. So the next counter that I bought actually was Fuel Cell Energy, which there's a link here. So if you click the link, right, it will come to the actual trade setup post that I made on 17 November lah. So same thing, I bought 3,400 share. I sold I sold about 1,009 sorry I sold about 2,700 shares. So I actually still have 700 shares holding that I'm still holding lah. So what you will notice with most of my trade is that I do not TP everything. I always leave a little bit there to ride the trend if it goes up longer. So if you look at my portfolio, I still have Geely Auto, Garmin, and Hype. I'm still holding majority of my position lah. So I do hold a little bit of the counter just so that if it move up higher after ITP, right, I can still ride the trend. And of course, I still have Kimley, Union Gas, and CMSC Gold Mine, which are not moving, but also not hitting SL. So I just let it be there. I mean, there's no reason for me to go and prematurely exit lah. Okay, so let's look at some of the counters that we can trade for for the coming week lah. So I'll just quickly go through. For example, let's say you see Starburst here, right? Let me go down to the 1 hour chart. Okay. So Starburst, actually traded Starburst somewhere around here, Then I kind of TP somewhere here on Thursday. Then those that enter slightly late gonna start at the top already lah. So which is why, let's say if I enter here 9 p.m. Sorry, 8:30, 9 like that, yeah. Then let's say I make my Facebook post around like 10. Then when you saw it at around noon, right, there's actually isn't much meat left for you already. So most of you will probably get stuck at the top lah if you sort of follow my trade call lah. So it's one of the reason I don't make intraday trade call, and I also don't hold the intraday trade overnight, mainly because studies like counters like Starburst, maybe something happened and you are stuck inside there. It is quite bad lah. And it's easy to TP when you are in the profit, but let's say you chase late and you are in the loss, right? Maybe you are afraid to cut, then the next day the counter gets suspended, you will be in a very big trouble lah. Okay, so let's look at a few counters. Starburst, I've given the example already. Okay, so this is the Capital Land Integrated Commercial Trust. So we will go through this towards the end lah. Same thing with Comfort Delgro, we will go through it towards the end. Okay, Franken, I posted an analysis previously. I'm not sure. I think some of you might have it. The entry was somewhere around here when I posted my trade setup. Price was somewhere around here. So if most of you buy, right, you'll probably get stuck here. Price retrace. But the thing is, stop loss is around here. And the stop loss itself has already accounted for this sort of movement. Because if you look at it, right, if you look at this chart, we are actually in a range. We are actually in a range here and here. So as long as we are in this range, right, price is going to ding dong a bit. But the thing is, the previous week, right, we actually have a very good bullish pin bar with good volume coming in, which is why the long entry came in lah. But it doesn't mean that this week it will simply just shoot up like this. We are still in this range. So as long as we are in this range, right, we are going to see some kind of sideways movement for a while lah. So do expect that kind of movement, and the stop loss itself has accounted for that kind of movement, which is why it is around here. So if it doesn't hit the stop loss, right, there is no reason for you to panic. This kind of small thing. A lot of people are panicking when this candle happen. But I'm like, personally, for me, if I'm in this kind of counter, I wouldn't even be caring about that counter. I'll just go on about my day doing my own thing lah, because stop loss is here. I know there will be this kind of movement. I know that my stop loss have accounted for this kind of movement, so I'm not going to care. So this kind of movement, just let it happen. Don't panic. No reason to panic at all. And hopefully we will be able to see this breakout lah. So if you panic and exit then next week this movement happen I can tell you you'll be regretting quite a lot lah. I'm not saying this movement will happen next week, but it's just that you need to give and take a bit. You cannot always expect you buy today, tomorrow the market go up. That's not going to happen. There will be a few cases where I post a trade setup, next day it goes up. That is a bonus. It's good that it happened, but I always take that as a bonus. I don't all my trade setup are not meant to buy now and then the next day it goes up. So do realize that. Same thing with high P. Let's look at high P also. So high P, it looks slightly better than Franken, mainly because we are out of the resistance already, but Franken is still somewhat below that resistance level. So like I said again, high P first call was here, then second call was somewhere here, then third call came around here. And when I entered at 1.40, I entered at 1.40, then price went all the way up. I did not TP, then price come here. A lot of people panic at this price movement. I just hold because my stop loss was like, I think around somewhere here like that. So I just hold, I just let it be. I'm not panicking, and now price kind of recovering a bit. So hopefully in the next week it can go up some more lah. I'm still holding on to high P's for a very, very long time already, and I'm quite happy with it. Okay, so Costco last week, very nice movement. And if you notice, it also came out in my screener, Nimbus SGS screener. Let's go to Singapore. Where's Singapore? Singapore. Okay, so Costco came out. Costco came out in my screener, and you can even see it here also. You can see here also in this post. Costco. Okay. So when you see all these posts, you are supposed to look at them individually and see which is the one that is worth taking the trade. But of course, if you are subscribed to the higher tier, I will sort of pick out the one that is much more potential to trade compared to you choosing by yourself. So okay, Costco, very, very nice movement. So last week, I a lot of my trainees and friends, close friends, very, very close friends, they managed to get in things like Costco. Costco actually appear on my intraday scanner also, together with Starburst and SPH. I personally took SPH and Starburst mainly because I don't have enough capital. If I have enough capital, I'll probably go for Costco also. So you can see Costco, it closes day high, very, very bullish, very near the touching the previous resistance. If you do not include the shadow of this candle, right, is actually broke out of the resistance already, and the volume behind this is extremely strong also. So I can foresee that in the next coming week, right, the bullish momentum should continue. We should see 2.8 or we should even see above 30 cents around this two level lah. So this one, it can be chased. It is good to chase, and you can chase it with a very, very good stop loss at around here, 20 cent here. Or if you skip 20 cent easily hit, right, you can go to 195, 0.195. So it is very, very I would say it's a counter that is safe to chase lah. Okay, so 0.245 to 0.195, it is about 50 cent, about 50 cent. So try to place your lot sizing to a to an amount that you are comfortable to lose. So this is 50 cents. So if I'm willing to lose $500 on this trade, I'll probably go for 10 lots. If you are willing to lose $1,000 on this trade, I'll probably go for 100 lots. So try to work out your lot sizing. Don't YOLO, don't close eye and go and like, or Zor say can go this one, high chance go up. So you don't throw your risk management out of the window. Always risk management first. And if you feel that you are not willing to lose 500, then you don't take the trade, regardless of how much chances it can go up. Don't take the trade if you are not willing to lose. So Costco, very good potential. Of course, next one is Hong Leong. Okay, Hong Leong slightly it came out in my scanner. I think let me see. I think it did came out in my scanner few days back. 2020. Do I have a scanner before that? 14. The last one is 14. Okay, let's look at November. Sorry, let me look around. Okay, it wasn't. I was hoping it came out somewhere around here, but I think it did came out, but I did not post the scanner out. So that is my bad. But currently Hong Leong, I believe it has run quite a bit already lah. So for the good place to take your entry would be this breakout here, but of course, since you have run up quite high, it's okay, you let it be. There is a resistance that is forming here, so most likely it can have this last leg towards 70 cent, but once it reach there, you might see some kind of retrace. So I'll probably would not advise chasing this last portion. So rather I will wait for a retrace, and if once the retrace come and if I see some support buying in, right, I will probably make a post again. I'll be watching very close eye on this, because I believe this rally, right, I believe that this rally, it is only the beginning of a very huge rally that is about to come in the future. So if you want to look back at how huge, right, it can be something like this. It can be something of this magnitude. Okay, but of course we don't want to jump into conclusion right now, mainly because this one is just a small move only. We don't want to jump into any form of conclusion yet lah. So we won't YOLO and enter everything. We just wait for support to come in, and then we slowly enter, slowly at the position, and hopefully we can catch the entire trend lah. But this is something you can keep on your watch list. Okay, so China Sunshine actually went up quite a bit. I think my TP one is around 5520. I think going up soon to reach. Hopefully it can go up and reach the TP there lah. If you are not in this counter, it's slightly late to chase the counter already, because it's quite near the TP area. Okay, sets we'll go through later also. Okay, so SDI, we have an amazing run in the last 2 weeks, and of course we are now reaching the resistance level here. So maybe if you see next week some selling coming, right, do not be surprised. Let's say if the selling is able to sort of maintain around 2750 level, right, I believe in the future, next 3-4 weeks later, it can proceed to go up and revisit 3000 level lah. I'm quite bullish on SDI lah. So any selling, it should be just short term. Okay, SPH. So SPH is another one that I mentioned, intraday trade that I took. I exited already, but I think this counter, it has the potential to go up much more in the future. But of course we have to look for a proper trade setup. This is actually a good trade setup, but if you chase this, your stop loss need to be here, which is below $1. So are you able to handle that stop loss? If you say yes, by all means chase. But if price start to retrace back and you chase here, do you have the mental capability to adhere to your stop loss? Because if price start to fall, right, you are going to see red in your position. Are you able to handle that red in your position? Or because there's no point you say you can handle this stop loss, you enter here, then end up when price retrace a bit, you see your account start to have negative, then you feel bad and then you exit. So if you are that kind of trader, right, then there is no point to chase it. If you have a stop loss there, then you should adhere to your stop loss. So if you can adhere to this stop loss, right, you can definitely chase. But let's say you cannot handle this stop loss below $1. What you can do is you wait for a retrace. Okay, if you wait for a retrace at least back to maybe 115 or 110, then you can buy. And if that's the case, right, your stop loss is much lesser compared to chasing at 125. Okay, but the thing is, if you wait, right, this is a very good momentum. If you wait, right, price can simply go all the way up. So right now there is a decision that you have to make. Do you want to wait for retrace or do you want to chase? If you want to chase, are you comfortable with stop loss below $1? So there is no such thing as like the perfect trade. Every trade, right, there is a give and take, and it is up to you whether you can handle the pros and the cons of a given trade or not. If you want the best of both worlds, you can actually do what I would do. I will buy a bit and chase. If price retrace, I will buy a bit more. So I usually have about 2 entry and my stop loss will be here. So because I split my entry into 2, right, my average price is probably much lower. So I don't really have to handle that big stop loss, but rather maybe such a much lower stop loss lah. So you can do that kind of strategy also, but that kind of strategy requires you to have a very high capital lah. Because if you there's no point going like 2 lots at 1.25, then another 1.5 lots at like 1.1 like that, because those are too much, too small amount to make sense lah. Okay, so try to work this out yourself. And I believe the future targets is around 1.5 lah. I'm hoping to see 1.5 in the future for this. If the trend continues, this is a very strong trend. Okay, fuel cell is one of my one of the counter that I recommended. I think the buy setup came here. I managed to enter here around 4.1 and it hit my TP1 and TP2. So now I'm out. I still have 700 shares left here. So if it goes up, I'm still holding on to it lah. Okay. If next one, Palo Alto Network. So this is one of the counter that I recommended also. And I think when it was around here lah, price was around here when the buy call came out, and now it is sort of improving lah. It is still, you can still if you are in this trade, you can still hold on to it. I mean, don't exit unless it hit your stop loss or it hit the TP. Don't exit midway. Levi also doing not bad. I think Levi's Levi entry came in way earlier lah. So if you are in this trade, you should be quite a big profit already. Let me go and check where's Levi. 11 November. Okay, Levi came in around 17.32. So now it's like 18.77 already. So you should be in quite a good profit if you got this ready. Okay, so Sprout Social. I think Sprout Social entry came here. Sorry. Sprout Social entry came in here. Then if you buy there, I mean you definitely not going to buy there lah. The next day opening was around here. So if you manage to buy there, right, you are in quite a good profit now already, and the stop loss is like much lower lah. So let's look at Sprout entry stop loss. Sprout Social Inc. The stop loss is at 41.2. 41.2. Somewhere here. Slightly lower lah, 41.2. Okay. Coordinate. Somewhere around there. So depending on the spread, right? I'm not sure if your stop loss is hit or not hit. I believe it shouldn't hit lah, but it managed to recover here a bit. So in a way, right, most of my stop loss, right, it has taken into consideration of retracement and rebound, this kind of price movement. But the thing is, most of the time you will be able to escape this sort of retracement, but there can be those very, very tiny occasions where you do end up something like this lah. So I'm personally not in this counter. I don't know what the spread was like, so I don't know if those who entered they got cut off or they managed to hold on to their share. I'm not quite sure lah. But I just want to emphasize that my stop loss is made with all this kind of price movement in mind already, but nonetheless there will be those rare moments where you do get into situation where you get stop out and then price still go up lah. So most of the time when that happen, right, I will always review back my stop loss and I will see what kind of adjustment I can make, so that the next time I make the trade, right, I will account for a little bit more buffer room so we do not get into this kind of situation lah. Okay, but if you are in this trade and you are not stop out, right, congratulations. If you are in this trade and you adhere to my stop loss and you still get stop out, I apologize deeply, and in the future I'll be making more improvement to the stop loss level lah. Okay, so Hong Kong counters. Okay, MMG. I did not trade it, but it has actually hit one of my TP ready, so it's currently doing quite well also lah. The next one, Geely Auto, my trade call came out way back in here, this level, and right now it is continue to going up and up, and I think I TP around here, but you will realize that I'm still holding a bit of share in Geely Auto, which is why is one of the reasons why I hold is it will ride any future trends that I that is still going to happen lah. Okay, Ang still one of the counter I recommended also. I think let's see where was it. 16. 2.79. The highest entry was 2.79. Okay, the highest recommended entry was 2.79. So 2.79 was somewhere around here. Okay. So currently it is still going sideways lah. Not much movement here. It's still going sideways. So hopefully we'll see a rally in the coming weeks lah. So this one is still a bit of question mark if you are in the trade, but do adhere to the stop loss. And of course, Garmin, I personally had Garmin since this level, and I TP here, and right now I still have a bit of shares, but it's retracing a bit lah. So I just let it be. I don't care about that remaining shares that I'm holding, mainly because I have I have adjusted the stop loss to break even. So even if it come back down, right, I will be able to exit at break even. So I won't be taking any loss lah. Okay, so let's go to the three counters that we did the poll on for recovery play. Those three counters that has the highest vote was ComfortDelGro. ComfortDelGro actually have the highest vote. The other two were tied, which were Kaplan Integrated Commercial Trust, and the other one is SATS. Okay, so let's look at ComfortDelGro first. Okay, ComfortDelGro actually recover very, very nicely, but what you will notice is that this support level, right, 1.32, right, is actually established way back earlier in March lah, and this support is actually held quite well. So 1.30 is a very, very good support. But one thing you have to notice is that we still have not break out from the resistance of 1.68, which was established back in May like that. So and not only that, ComfortDelGro actually in the past quarter, I think they did suffer some loss, but I mean right now, hopefully with phase 2, phase 3, the business should be improving in the next coming quarter lah. But you have to, one thing you need to take very very careful note is that this recovery, right, this recovery is actually expectation on futures earning. What I mean is that if let's say in the future, next year, ComfortDelGro release its financial report, and if the financial report doesn't turn out to be as good as what the public expect, right, then this price will start to go down. So this rally is already happened with the future recovery in mind already. So if let's say the public expect ComfortDelGro to improve its profit by 100%, for example, 100%. But let's say next year, the financial report come out and ComfortDelGro only have a profit of 70%. Most of you will be happy, wow, ComfortDelGro 70%, confirm price chung. But the thing is, public expectation already take into account where the profit is 100%. Meaning even though Comfort has 70% profit, right, price is going to fall also. So it is always expectation versus reality. Sometimes the share price is much faster than actual result. So if so, the share price will already account for future result, and when the future result come and it's not as good, right, price will start to decline. So you have to be very don't YOLO all the way. You have to be very careful. And let's look at a slightly higher time frame, okay? Weekly. So in a weekly time frame, what you can see is you have a resistance here at 1.7, and of course just now I said you have a support at 1.3. So 1.7 and 1.3. So this is the two range that ComfortDelGro is currently stuck in. But if you look at it from a technical perspective, you have a very bullish movement here with this engulfing green candle with very high volume. And in the past 2 weeks, you also have a two bullish green candle with increase in volume. So we have a lot of this bullish candle coming up. And when price decline during this period, right, from July to October like that, right, you can see the volume is quite little. So it sort of says that there's not much selling around. There's not much selling around, and now price is coming to go well. So the thing is, the chances of breaking this resistance is quite high, but it is not broken yet. It is quite high, but it is not broken yet. So if there is still a good chance that price can hit the resistance and retrace a bit before it continues to go back up. So if you are planning to buy during this period, right, you have to buy with the awareness that it is still in the range. Meaning if price come back down because it hit the resistance, you don't come and, hey, how come price come down lah? Price what lah? Something happen lah? This lah, that lah? Why I buy them price down lah? Because it is very obvious you are still in the range. Okay, so be very very careful. So if you are someone who's scared of that, right, what you can do is you can buy at the retrace. Make small buy, make small entry, so you don't go one big entry here, but rather split out your entry into probably three or four batches, and each time if price retrace, it come to your price, right, you buy. Then if when this 1.3 support holds and everything recovers, you will have much more profit compared to, let's say, you buy a big lump sum here. If you buy a big lump sum here, you hit the stop loss, you are going to take a huge loss. But if you buy batch by batch, right, you are, if it hit stop loss, you are going to only take a little bit of loss, and if price recover, you are going to get even more profit lah. So it's either that or you wait for the price to break out of 170 first. Then only after it breaks out 170, then you buy, because by then price have broken out of the resistance already, and it is very likely price will continue to go forward to 2.2 or 2.4 lah. Okay, so do keep in mind this long-term perspective. Though if you want this breakout trade, right, let's say you want this breakout trade, towards 2.6, for example, and you buy the breakout, then you don't go and complain why the price is ranging right now, because its price is ranging, then it's not breaking out. So you don't like keep thinking about things that are very contradicting to your own trade plan. If you want the breakout trade, you don't care what the price is going on in between. So you have to keep all these things in check. And if you want to buy into this range, then you also cannot complain that price is ranging, because you buy into the range, is still in the range. You buy with the knowledge that price is still ranging. So what for you want to complain that the price is now retracing back? It is retracing back simply because it is still ranging lah. Okay, so keep all these thing in mind. Okay, next one, let's look at Capital Land. So Capital Land integrated commercial trust, right? It is slightly different from Comfort Delgro in a sense that this resistance at 2.35, right, is already established way before your COVID-19 happened lah. So when price did a very good rebound during the COVID-19, right? It got resisted at 2.4 and it start to come back down. So even if everything recovers, even if everything recovers, COVID-19, everything recovers, right? I still believe that this 2.4 to 2.6, this area, it is not going to be a easy resistance to break. Meaning COVID-19 can recover, all the flight resume, all the business back to normal, but you can see this cap land go back up here and then get stuck there and then go sideways here like that. So that is a very, very possible scenario for this counter. But the thing is, of course, this counter is a risk. If it gets stuck there, then you are going to get a lot of. You can still collect your dividend also lah. But do keep that in mind lah. Doesn't mean COVID recover then suddenly every other challenges that the company face also disappeared. No, it's not like that. If COVID recovers, okay, COVID-19 recovers, but previously the resistance that was established before COVID-19, it is still in place. You probably will hit around 2.4, 2.5, and you will see selling start to happen lah. So just because we recover from COVID-19, don't expect it to go to $3, $4, that kind of level like that. If you want to go for that kind of trade, right, you probably want to wait for the breakout first. But at the current movement, right, the trend is there is a bullish momentum for upwards, but do take note of the immediate resistance at 2.4 and 2.6. Okay, and of course the support is around 1.8, 1.7, and you do have a very strong support at 1.6, 1.5 like that. So I don't foresee Kaplan to go below 1.5. So any entry you can get close to 1.6, 1.5, right? I think it's actually quite good. So you can probably get your entry around here, or excuse me, if you are lucky enough, maybe you can get it at 1.6. And of course, it's much better to ride this trend rather than you chase here, then there's only a bit here left. Okay, so patience is the key. Same thing with Comfort Delgro. I do recommend entry by small batches rather than big entry and chasing the price there. Similarly, same with Comfort Delgro, we have a range here. We have a range that is forming here. So because this is a range, right, it is going to go sideways a lot. It is not going to go one uptrend like that. So if price goes sideways like that, right, it is because you are buying the share price while it is ranging. So there's no reason to panic. There's no reason to complain. Hey, how come ranging lah, what lah, this lah, that lah. So just because you buy in doesn't mean the trend of the share is going to change immediately. And the last one, what's the last one? Sets. Okay, so sets is only one of the counter that broke out of the resistance. So the resistance is here and the support is here. Okay, so it has broken out the resistance already and it's continue to go up. So the target price is, I would say, about $5 to 4.65 like that, around there lah. But now, I mean, set is quite sensitive to airline. So do be careful about this, because recently we have the Hong Kong travel bubble being delayed by 2 weeks, right? That can cause sets to come down a bit. But I believe the majority of the sets recovery come from being able to transport vaccines lah, or something like that, because they require a very fixed, the temperature is quite strict lah. Okay, so now that price have gotten up quite a bit, right, you can actually wait for retrace towards 3.8 like that lah, 3.8 like that, or even 3.5 like that. So if you are looking to buy this in, right, since it's already broken out, you do not want to be holding if price come back down into this range. If price come back down into this range, right, then it is going to be stuck in this range for the next very long period. So if you bought this breakout trade, right, you want your stop loss to be around 3.3 like that. 3.3 like that. 3.3 is where it is back into this range rate. So let's say if price drop, then it hit 3.3, right? Then you should be out already. You go and play something else. Okay, because it is going to be ranging here. But if you want that extremely long term, right? The support is of course at 2.5. I doubt price will go below 2.5 anymore. So if you want that kind of trade where you are acceptable with holding until 2.5, right, then you do not want to be entering all your position here. You want to same thing, batch it out also, so that when it come down, you can actually have a much better entry lah, rather than going everything here. But because of the fact that this has already broken out, right, the momentum is much higher, so you might actually not get this retracement lah, which is why if you are going to chase, right, then you don't hold it when it break back into this range, right? You exit at 3.3 if you are willing, if you are going to chase. If you don't want to chase, you want to buy by batches, then you can put your stop loss around 2.5. So overall, I think Sets, Comfort, and CapitaLand Integrated Trust, right, they have one good thing in common, and that is they give out quite good dividend. So even if you are stuck holding for a very long time, right? I think you can still write out the dividend. So do buy all these with long-term perspective in mind, and make sure that you adhere to all the stop loss level that I have mentioned. Personally, I don't like to take this kind of trade because I don't like holding things very long just for a bit of profit. I don't like dividend counters because because I'm a very short-term trader, so I actually look for counters that move very fast, exit, and then I buy another one. So although you might see I have counters that have been stuck and holding like Kimley, CNMC, right? When I buy them with the expectation that it will shoot up. But of course, not everything will shoot up. So those are there lah. But I still stick to my trade plan, which is the stop loss. So if the stop loss is not hit, I just leave it there lah. So so I am more of short-term trader task. I don't really like buying in and then waiting very long for the profit to happen. So I mean I like to take more risk. So this kind of less risky, risk averse counter, right, it is not my kind of trade, my kind of taste. So I personally do not trade all these kind of counters. But if you are looking to trade these kind of counters, then you can follow the strategy and follow the advice that I given you earlier, and hopefully most of the counters, since the as Singapore fund flow is positive, right, I do hope that whatever we enter, right, it can continue to go up in the next few weeks lah. And mainly for the CapitaLand, Comfort, and Sets, right, they are part of the STI index, and currently as you all know, past 2 weeks blue chips have been doing quite well, so I do hope they can continue to provide this kind of momentum lah. Okay, so that's all for this week, and have a good and safe trading next week. Thank you very much for listening in.